Welcome to another Tax Talker. We're continuing our summer tax problems series with the most classic of all, the IRS notice. Whether you just had that fun surprise in your mailbox or it's been sitting in the paper pile for a while, the good news is these can be resolved relatively easily in many cases. Most IRS notices are not audits. In this video, I'll give you a simple framework of how to approach the notice, what to do, and more importantly, what not to do. Let's get into it. First, you want to figure out what the fundamental claim is that the IRS is making. And that is not, oh, the IRS says I'm owing money. That's not the claim they're making. The claim is, why do you owe money? Or what is the notice asking of you? Basically, every IRS notice is going to boil down to two things. One is an identity verification or some other issue on your account. Or number two is the IRS is telling you that they disagree with something about a filed tax return that you've made. The notice is going to tell you which one of those it is. It's also in the top right-hand corner. Look for what tax year they're even talking about. It doesn't necessarily have to be 2025. It could be an older tax year. And also see what the deadline for responding is. Regardless of whether you're going to agree, disagree, just know what deadline they're giving you to deal with the notice. Now, step two is how you handle it. So if it's one of those identity verification notices, they're going to give you steps in there. You're going to usually be able to do that online in a matter of minutes. But let's talk about the harder issue to resolve. The IRS is disagreeing. One of the biggest mistakes people will make is they'll look at a notice, they'll see it's a balance due, they're like, I'm just going to pay this darn thing. I certainly get at a certain dollar amount, it's low enough, it's not even worth your time. I get that. Sometimes the IRS is only partially right or they're just flat out wrong. So the bigger that balance is, the more it's important to understand what's behind it. And even after you're reading through the notice, if it's still gibberish, one thing you can try is in that top right corner where it says tax year, it's also going to give you a notice number. And you can search that number because many notice numbers fall within a specific rubric. Included a link below with a cheat sheet, but do note that these numbers do change a lot. So you might want to corroborate that with a more recent one, especially if you're not watching this in summer of 2026. A helpful way to approach a tax notice is to go get the tax return that they're talking about. Many tax notices, especially if they're disagreeing with something on your return, are going to be in a format of a column where it's going to show you as filed and what the IRS adjustment is. Most of those are going to match up, and you're going to be able to hone in on what line on your tax return is the issue. How you respond is really going to fall into three different buckets. First is just you agree. In that case, you may have to pay a balance due, and you would follow the instructions in the notice for doing that. Sometimes the notice is uncovering an error that's in your favor, and you're getting a refund coming to you. Usually you don't have to do anything unless they're, for some reason, not sure on your identity or there's some other problem on your account that you need to take steps in order to get that refund. But let's go back to the worst case scenario. It's a balance due. A typical one could be when you filed your return, you forgot about that job you quit in January. You quit in January 2025. There was an old W-2 from the old employer. You never had that and you didn't include it on your return. Well, the IRS gets a copy of that W-2 from the old employer, and that's how they know it got missed. They will have adjusted your return. They'll have increased your wages, your income, but they'll also have increased your withholding, because you had income tax withholding most likely on that. And they'll have come up with a tax adjustment. It could be in your favor or against you, depending on how much they withheld relative to the income. And as a reminder, the IRS is only looking at your federal return. If you're in a state with income tax, you may need to amend your state income tax return. The second possibility is partial agreement. I think this gets missed a lot, because a lot of times the IRS is getting partial information. Think about an investment brokerage account. They might have gotten a 1099 and you forgot to include that on your return. Some interest, some dividends, some stock sales. A lot of times the IRS doesn't get the basis right on a stock sale. Even if the basis, your cost basis in the stock is quote unquote reported to the IRS, it'll say that on 1099, I still see the IRS miss that a lot on notices. So they'll say, hey, you sold Apple stock for $10,000 proceeds, zero cost basis, $10,000 of additional income. Well, the IRS is right that you missed the stock sale, but they don't know your cost basis. Your cost basis in that Apple stock was $8,000. You only had a $2,000 gain. So they're saying you owe tax on $10,000 worth of additional income, whereas really you only owe tax on $2,000 worth of additional income. In some cases, you can respond to the IRS with partial agreement, or you can provide information and they will make the adjustment for you. In other cases, they will simply say, if you disagree, you need to amend your return. The IRS notices are pretty good at saying if you agree, do X. If you don't agree, do Y. So in a case where there's partial agreement, you're going to want to look to, okay, what do I do if I don't agree 100% with this notice? In the final instance, if you just flat out disagree with the notice, maybe the IRS says you claimed a tax credit and they don't believe you were entitled to it, but you have the documentation showing that you do qualify. In those cases, your best option is usually a written reply to the notice. There'll be a mailing address that you can send that back to the IRS. You'll want to include a copy of the original notice and as well a copy of that documentation proving why you are eligible for the credit, or whatever support you can offer in the particular situation, saying, no, IRS, you're wrong, and this is why. And of course, as with anything mailed to the IRS, always use certified mailing. A lot of cases, I don't usually call the IRS, especially with a first notice. If you've responded and you already gave them information and it's not getting cleared up, well then maybe a phone call can be helpful to resolve. Finally, when is it time to get help? It's really going to be situation dependent and really the amount of money we're talking about. If it's thousands of dollars of tax, and especially if it's interest and penalties. Tax and interest, that's a statutory requirement. Very hard to get out of tax and interest. Penalties, though, the IRS has a lot of discretion on that. So if the amount you owe, they will give you a breakdown of how much of that is actual income tax and how much is interest, which is also statutory, and how much is penalty. The larger those numbers are, the better it is to get a professional in your court who will be good at knowing the system and getting those abated or at least lessened. And that is the Tax Talker for today. Remember, don't panic, but it is better to get to this sooner rather than later. Get to it by the deadline that the notice gives you, and just ask yourself, what is the fundamental claim that the IRS is doing? What's the issue? Why did they send you this? Thanks for watching. See you next time.